we've had lots of legislation in various areas already in the European Union on issues like plastics, environmental issues, emissions. So we're trying to establish a taxonomy so that it's clear what is green, what is not green.
We need to be patient. We need to wait for this regulation to go through its legislative processes and also understand that this is part of an ongoing process.
In the old days, that's 2 years ago, we were talking about what is the impact of the business on the environment. Now it's completely shifted and it's saying, okay, what is the impact of the environment on the business?
In order to deliver fundamental change, you need consumers to change, you need regulators, you need technology, you need culture, and all of that's still to happen. It's not just the SDGs that will deliver that. I'm an investor. I'm absolutely about making money for our clients, and I think there is an interesting tension that has played through this conversation about whether, you talked about it being a duty of financial markets to deliver against the SDGs, kind of irrespective of what it does to your returns. I'm very reluctant to go down that route because I don't think you'll ever get a market to move on the basis of morality.
One of the most important strategies for engaging is actually creating new benchmarks and backing benchmarks. And I want to highlight the fact that I think there is actually a fundamental gap in some metrics and data in order for investors ourselves to even demonstrate our own alignment with the Sustainable Development Goals.
If we're all here, we all wish for this market to continue to grow. My wish as well is to see more actors and even more actors in more difficult sectors who can also make a big difference.
The market definitely needs second opinions. Why? Sustainability is a hugely complex concept and it's evolving. So yes, we need specialist knowledge to certify whether certain projects are green, whether certain companies are sustainable. At the same time, we are all human beings, which means we like self-certification.
Consider if I'm an investor and I'm running a fund which is non-green dedicated and isn't as pristine as you say, but that fund instead actually buys some of the new issue HSBC 81 or NL hybrids, other parts of the capital structure, but we want to have allocation to green bonds as well because we think it's a great instrument for mainstream investors. Is it fair to say that you would misallocate those guys compared to those who do not bring those benefits to the rest of your capital structure? You have to say yes or no on that one.
I think going forward it would be very helpful to have a classification of the greenness of investors and what they are actually really doing. And maybe in addition to that, like asset managers, they have several kind of funds. They have green funds and they have traditional funds. So I would encourage if these kind of investors actually split their orders into a traditional fund and for their green funds, that we have more guidance in the allocation of the book.